Welcome back to the Deep Dive. Today, we're cutting through the noise around a company that's quietly becoming, well, really pivotal in our planet's energy future. GE Vernova, or GEV, on the NYSE, that's the New York Stock Exchange, where you'd find its shares listed.
Right.
Think about it. From powering your AI smart home to lighting up whole cities, the demand for stable, clean energy is just skyrocketing. But who's actually building the infrastructure for that? We've got a stack of fresh analysis, financial highlights, strategic insights, the good stuff directly from the experts, all current as of July 2025. Our mission today is to unpack everything you need to know about GEV, from its recent spinoff to its really critical role in powering the AI revolution, so you can feel truly well informed. Okay, let's unpack this.
Yeah, that sets the stage beautifully. GE Vernova is absolutely a critical player as the world grapples with, well, more energy demand and this urgent need for decarbonization. We'll synthesize the latest data, give you a comprehensive, investor-centric view of where this company stands right now.
Okay, so before we dive deep into the financials, maybe for anyone just tuning in, could you give us the quick elevator pitch? What is GE Vernova, and what makes it so uniquely positioned in this huge energy shift?
Absolutely. So GE Vernova is a global power technology company. It spun off independently from General Electric back in April 2024. Its core business revolves around providing essential product services for power generation, transmission, conversion, and storage. It's directly exposed to massive global mega trends, the rising energy demand and the urgent global push for decarbonization.
Right.
These aren't just, trends, they're foundational shifts that are going to redefine economies for decades.
And they have distinct business segments, right? It's not just one big thing.
That's correct. And it's really key to understanding their approach. It's diversified. They operate across three core segments. First, you've got power. This includes gas, nuclear, hydro, steam technologies, basically. Everything you need for stable baseload power.
That's the power that's always on, right?
Yeah.
Keeps the lights on 24/7.
Exactly. The continuous, reliable supply grids need, regardless of weather, keeps our homes, our industries humming. And notably, they have a huge footprint and installed base of over 7,000 gas turbines globally.
Wow, 7,000.
Yeah. Second, wind. This segment develops, supplies onshore and offshore wind turbine technology. They've got over 57,000 turbines installed worldwide, so they're a significant force in renewables, even with some of the industry challenges we've heard about.
Okay. And the third?
And finally, electrification. Now, this segment is really forward-looking. It focuses on modernizing power grids, distributed energy solutions, and providing the crucial software and automation.
The smart stuff.
Exactly. It's absolutely essential for integrating renewables like wind and solar, which are intermittent, right?
Okay.
And enhancing overall grid stability resilience. It's like the nervous system for the modern grid.
So that electrification segment, it's not just wires, it's the grid's brain, essentially.
Mm-hmm.
Is that intelligence and maybe the GE legacy behind it, one of their sort of secret weapons? What really sets them apart?
That's a great question, and you've hit on a critical point there. See, GE's 130-year legacy isn't just history. It's about these deep relationships with global utilities, governments, often spanning generations.
Right. They know everybody.
Pretty much. It gives them that first call advantage on these huge long-term infrastructure projects. Newer players, they can't really penetrate that. It creates a kind of economic moat around their core business. Beyond that, what's truly fascinating is their strong competitive edge. It's rooted in a few key areas. First, that GE legacy we just talked about, deep expertise, proven tech. Second, their vast global installed base. This isn't just history. It's a constant, stable, recurring service revenue stream.
Ah, the service contract.
Exactly. High margin component of their earnings. It's almost like a subscription service for industrial power. And third, they're truly leading the energy transition. They offer solutions across all critical stages, from generation to grid modernization, that positions them to benefit hugely from the surging power demand, driven by AI electric vehicles. They're selling the whole solution, not just the parts.
Okay, let's talk numbers then. Numbers tell a powerful story, often drive the market perception. Their Q2 2025 results just came out. What stood out? What's the trajectory look like?
Right. So GE Vernova announced strong Q2 2025 results on July 23rd. It continues the positive momentum they've built since the spinoff. Key highlights. Total revenue, $9.1 billion. That's a solid 11% year-over-year increase. Even better, 12% organic growth.
Meaning not just from buying other companies.
Exactly. It's core growth. All segments grew, but electrification was a particularly strong contributor. Profitability-wise, net income was $0.5 billion. That's a 5.4% margin. Adjusted EBITDA, $2.8 billion, and 8.5% margin. They also generated positive operating cash flow, $0.4 billion, and free cash flow of $6.2 billion. That's crucial for self-funding growth.
And cash on hand.
Very strong. $7.9 billion cash balance gives them a lot of flexibility. Orders grew 4% organically to $12.4 billion. And critically, their backlog increased by $5.2 billion. Gas power equipment backlog and slot reservations grew from 50 gigawatts to 55 gigawatts.
Wow.
Yeah, that provides strong multi-year revenue visibility. Investors like seeing that. Gives confidence in future earnings.
That is a lot of positive movement. But how did the different segments perform within that? Because, we know wind has faced some headwinds, no pun intended.
Indeed. Yeah, the revenue breakdown shows a mixed but overall positive picture. Power orders were up a solid 6.8% to $4.76 billion. That shows continued demand for their traditional and next-gen power stuff. Wind revenue was $2.25 billion, up 8.9%. That's good growth, but it's still reported a loss.
Okay, still in the red.
Yeah. So the trend is improving, but the full profitability turnaround for wind, that's still a work in progress. It's a key watch out for investors. But electrification, that was the real standout. Revenue up a remarkable 23% to $2.2 billion.
23.
Yeah. And significantly improved profitability, showing a $332 million profit. So electrification isn't just growing, it's becoming like the digital brain of GE Vernova. That surge, the profit jump. It underscores it's not just hardware, it's the high-margin software automation, grid intelligence that's going to manage this whole energy transition. Integrating renewables, handling AI data center demands.
So 23% growth in electrification. Wind, still losing money. That's quite a difference. Does this suggest GEV is kind of quietly pivoting strategically? Or is electrification just responding faster to what the market needs right now?
It's likely a combination of both, I think. Electrification is definitely responding to that immediate accelerating need for grid modernization, energy transition, data center growth. It's happening now, but it also fits a strategic focus on higher margin, software-heavy solutions. Wind is still crucial for their decarbonization story.
Right, they need it for the green image.
Exactly. But electrification offers a clearer, more immediate path to profit and, high-quality earnings. It's becoming a critical growth engine for them.
Okay, and the full year guidance. Did they adjust expectations for 2025 after these Q2 numbers? Because that's often where the market reaction really happens.
Right, and this is where it gets really interesting for investors. This explains a lot of the positive market buzz. They significantly raised their full year 2025 guidance, pretty much across the board. Revenue, now adjusted to the higher end of the $36 to $37 billion range.
Okay.
Adjusted EBITDA margin, raised from the previous 7-8% to a more robust 8-9%.
Nice bump.
And maybe most dramatically, free cash flow increased from the initial $2.5 billion range to an impressive $3.5 billion.
Wow, it's a big jump in cash flow.
Huge jump. Yeah, that substantial upgrade was a key factor in the positive market reception. Signals strong execution, better cash generation.
So if the market's already reacting positively, maybe pricing in a lot of this future growth, doesn't that make it inherently riskier for someone looking to invest now? What's this mean for valuation metrics?
You've hit on a crucial point about valuation, absolutely. As of July 2025, market cap around $149.8 billion. Their PER, price to earnings ratio, based on estimated 2025 EPS of $6.65 from Zacks. It suggests a high valuation.
Meaning expensive.
Well, it means investors are willing to pay a high price for each dollar of GEV's current earnings. Reflects strong confidence in future growth. Similarly, their PSR, price to sales ratio, is about 4.0x. Market value is 4 times annual revenue, again indicating premium expectations compared to the industrial machinery sector average.
So the market sees it almost like a tech stock, not just industrial.
That's a good way to put it. This high valuation suggests the market sees GEV not just as an industrial player, but as this critical enabler of the AI revolution, the broader energy transition. It's paying a premium for that pivotal role, which, as you imply, also means less room for error if things don't pan out exactly as expected.
Right.
Their balance sheet, though, is robust. Minimal debt, strong cash reserves. That implies a very sound financial state, which, helps de-risk that high valuation somewhat.
That's a really interesting point. What about dividends? Are they sharing some of that financial strength or just plowing everything back into growth?
Yeah, good question. They have actually been paying dividends since the spinoff from GE. That's a good sign. Shows commitment to shareholder returns, even as a growth company. As of July 2025, the dividend yield is about 0.18%. Annual dividend around $1 per share.
Okay, so not a huge yield.
No, exactly. Their payout ratio is very low, around 3.56%, means they're reinvesting most earnings back into the business for future growth. That's typical, often desirable for a company in this early growth stage, especially in a capital-intensive industry like energy.
Makes sense.
They pay quarterly. Next payment due August 18th, 2025. Ex-dividend date, July 21st, 2025. That's the cutoff to buy and get the dividend. So yeah, balancing some return with aggressive reinvestment.
Okay, let's broaden the view now. Beyond the company's internal numbers, if we connect this to the bigger picture, what external factors are really moving the needle for GEV's stock price and its overall business? Because, no company operates in a vacuum.
Right, absolutely. GE Vernova's stock is definitely impacted by several layers of trends, from micro to macro. First, there's direct company news. Obvious stuff, right? Strong quarterly results like we just discussed, major contract wins that directly boosts investor confidence, news on accelerating that wind business turnaround, especially offshore wind, which is tricky. That's critical for sentiment.
People are watching that closely.
Very closely. Likewise, long-term investments in things like next-gen grid modernization or SMRs, small modular reactors.
Smaller nuclear tech.
Exactly. Smaller modular reactors can be built quicker, potentially cheaper, offer stable, carbon-free power. News on that front drives long-term value perception. Then you have power and energy industry trends. This is huge right now. The explosive growth of AI data centers, it's causing a massive surge in electricity demand.
It's almost unbelievable how much power AI needs.
It really is. It's like the grid is being asked to run a marathon after training for a sprint. And GE Vernova is selling the specialized running shoes, basically.
Good analogy.
It puts their power and electrification segments in an incredibly powerful position. Then there's global decarbonization policies, renewable energy policies.
Right.
Like the U.S. Inflation Reduction Act, the IRA.
Right, the IRA subsidies.
Exactly. That directly boosts their wind and electrification businesses by creating huge market demand. Need for grid modernization, energy security, all driving demand. But, potential risks here too. Raw material price volatility, supply chain stability, those can affect costs and timelines.
Okay, what else?
Thirdly, industrial and infrastructure investment trends. Broadly, global infrastructure spending, especially on energy transition stuff, expands GEV's opportunities. But it's capital intensive. Large projects are sensitive to the overall investment climate, government commitments, and finally, the biggest scale factors. Global macroeconomic trends, global economic growth, inflation. They impact project timelines, costs, interest rate policies from central banks, increase borrowing costs for clients, could delay projects, geopolitical risks, trade disputes, disrupt supply chains, market access, and of course, government spending and subsidies play a crucial role in enabling these massive renewable energy and grid projects.
That's a really complex web of influences. Lots of positive tailwinds, it sounds like, but the energy sector is really smooth sailing. What are the main risks investors should really be aware of? Clouds on the horizon.
Yeah, it's crucial to look at the risks. While the growth drivers are strong, key risks include wind business recovery delays. That segment is still losing money, particularly offshore wind. It's facing serious supply chain issues, inflation.
Building those giant turbines offshore sounds incredibly complex.
It is. Imagine trying to build a skyscraper-sized turbine in choppy seas, with material costs fluctuating wildly, specialized ships backlogged globally. A slower-than-expected turnaround there isn't just a hit to the bottom line. It drags on their green story, their ability to capitalize fully on renewable mandates. Then there's macroeconomic uncertainty. Global slowdown, persistent high inflation, high interest rates for longer. That could delay or even cancel big energy projects. Cost of capital becomes too high.
Makes sense.
Government policy and regulatory changes, huge factor. Energy is so sensitive to policy. Unexpected changes to renewable subsidies, carbon rules could directly hit GEV's business model, project economics.
Some might say relying too heavily on things like the IRA is risky itself, right?
That's a fair point. Critics do argue that. While GEV benefits massively now, you could argue the underlying tech investments would still be valuable, but the pace of deployment would certainly slow without policy support. It's a dependency risk. Also, intense competition. We mentioned Siemens Energy, Vestas, Mitsubishi Heavy Industries, plus rising Chinese competitors, tech leadership, cost efficiency, absolutely critical for GV to stay ahead. And lastly, supply chain instability. Disruptions in the complex global supply chain for making this huge equipment, plus volatile raw material prices that can hit production costs, delivery times, project profits.
Okay, so given those risks and the intense competition, how does GEV specifically stack up against those rivals across its business lines? Where are they really strong, and where do they maybe need to play catch-up?
All right, their position varies. In power, Siemens Energy, Mitsubishi Heavy Industries are key rivals. GEV's strength, that dominant gas turbine installed base, their advanced H-class technology.
The high-efficiency turbines?
Exactly. Setting benchmarks for performance, lower emissions, they're very strong, especially in North America. That installed base is a big competitive moat through those long-term service contracts. For wind, Vestas and Siemens Gamesa are the clear leaders. GEV has a solid presence in North American onshore wind, good blade manufacturing, but offshore wind needs improvement, profitability, market share. They're behind rivals like Siemens Gamesa there.
So playing catch-up in offshore.
Definitely playing catch-up in a really crucial, fast-growing part of the renewables market, and in electrification. Highly competitive space. Siemens Energy, Hitachi Energy, Schneider Electric, Eaton, lots of players. GEV differentiates itself with a broad portfolio. Grid optimization, automation, software, they leverage that existing GE industrial customer network. The focus seems less on sheer volume, more on integrated smart solutions that get higher margins.
Got it. So beyond the external stuff, the competition, what internal capabilities give GE Vernova that durable edge? What's kind of baked into their DNA that makes them robust?
Yeah, their internal strengths are pretty foundational and give them significant leverage. First, GE's legacy and tech leadership. That accumulated technical expertise, the R&D investment, that huge global installed base from 130 plus years, invaluable assets. It's not just a brand, it's deep engineering talent, customer trust.
Right, the history matters.
It really does. Second, their ability to offer integrated solutions. End-to-end, across generation, gas, wind, nuclear, and transmission distribution, grid software. That's a big advantage for complex, large-scale energy transition projects. Customers often prefer one provider for critical stuff. Third, that strong backlog and stable service business. Record $119 billion backlog provides clear revenue visibility for years.
That must help them sleep at night.
You'd think so. Plus, the service and maintenance revenue from installed equipment, stable, less economically sensitive income, acts as a buffer during downturns. Fourth, management expertise. Experienced team inherited from GE's energy business. Now they're independent, driving efficiency, executing strategies. Especially on the wind turnaround, electrification growth. Proven track record in the industry.
Leadership continuity.
Exactly. And finally, financial health. That strong $8 billion cash balance, minimal debt, gives them lots of financial flexibility. For R&D, strategic M&A, maybe shareholder returns, lets them seize opportunities without borrowing too much.
Okay, so summing it all up for our listeners, especially maybe an American investor looking at this, what's the overall investment thesis for GE Vernova?
Okay, the big picture. GE Vernova looks like a compelling company for long-term investors. If you want exposure to those powerful structural growth drivers, global energy transition, surging power demand, it's right there. Their inherited GE legacy, the tech prowess, that extensive installed base, those are key competitive advantages, hard to replicate. The company benefits from huge tailwinds. Decarbonization, energy security, rising electricity needs from AI, EVs, their strong backlog, improving financials highlighted by Q2 results, upgraded guidance signal a company on a positive track, really poised to capitalize on these megatrends.
But, always a but, what are the crucial considerations, the watch-outs for an investor? Every investment has complexities, right?
Absolutely. You should definitely be mindful of that current high valuation. As we discussed, it already prices in significant growth expectations.
That's margin for error.
Exactly. The full profitability turnaround of the wind business, that will take time. A slower recovery there could weigh on overall profitability. Global macro shifts, persistent inflation, policy uncertainties could impact those large infrastructure investments, delay or cancel projects. And finally, that highly competitive landscape demands continuous innovation, cost efficiency from GEV to maintain its edge. They can't rest on their laurels.
So given all the strengths, risks, market position, what's a suggested investment strategy for someone considering GE Vernova?
Well, first off, GEV seems best suited for investors with a long-term horizon. You're focusing on capital gains here, not really immediate high dividends. Given the recent stock appreciation, that premium valuation, you might consider a staggered buying approach. maybe during market pullbacks. Helps manage your entry price, mitigate some valuation risks.
Don't go all in at once.
Probably wise, yeah. Continuously monitor those industry trends, power demand, energy policy, especially the pace of AI and data center investments. That'll be key to understanding how fast their growth might accelerate. And of course, always do your own due diligence. Make sure any investment aligns with your personal financial goals, your risk tolerance.
Okay. We've navigated the pretty intricate landscape of GE Vernova, from its core business, financials, competitive position, to the broader trends shaping its future. This deep dive really highlights its strategic importance, doesn't it? A foundational player in this evolving energy sector. But as the world electrifies faster than ever, driven by climate goals and that just insatiable demand from AI, it does raise a bigger question for you, the listener. What other unexpected sectors or technologies might become the next crucial bottleneck, or maybe the next explosive growth area, as our world gets ever more reliant on robust, clean power? Keep pondering that one. And we'll be back with another deep dive soon.